right? It does 140% a year returns, and that's including 3 or 4 80% drawdowns, right? No asset has ever existed like this before. It's a fucking gift. When we needed it the most, we've been given a gift from the gods, much like AI was a gift from the gods. We've been given something that can unfuck your future, which is the whole thesis that I've been talking about. So do that.
In this compelling video, expert macroeconomist Raoul Pal delves into the unprecedented changes reshaping global markets and economies. Pal, known for his deep insights into macroeconomic cycles and financial markets, explains why the current era of technological acceleration, driven by AI, robotics, and energy innovation, is unlike anything humanity has seen before. He dismantles conventional thinking on inflation, debt, and productivity, offering viewers a bold vision of the future where economic fundamentals are being rewritten. Prepare for an eye-opening discussion on how these technological shifts can unlock immense potential and reshape your financial future. If you're looking to stay ahead in the world of finance and investments, subscribing to Financial Navigator is a smart move. Whether you're interested in understanding cryptocurrency trends, stock market strategies, or just want to gain deeper financial insights, our channel offers you expert analysis and easy-to-follow guidance. By subscribing, you'll ensure that you never miss out on timely updates, actionable tips, and valuable content designed to help you make informed decisions. Plus, as a new channel, your subscription directly supports us in growing and bringing even more high-quality videos to the community. So hit that subscribe button and start navigating your financial future with confidence.
There's a large group of people who want their justice. They want the system to fall apart, to say, I told you so. You're printing money, you're creating inflation, you're doing this, it's all unsustainable. And they don't want to see that what's actually happening, this 8% debasement, is basically all of us being charged 8% for a put option on the system, which is actually maybe not that bad. But they don't want to see it. And then a lot of people who aren't invested in technology can't stand the fact that it outperforms versus what was deemed to be the right way to invest, which was the value investor, the cyclical commodity, deep value, that thing. And that's not been working for 30 years. But yet they want it to come back. So they get more angry as markets go. And then they start drawing patterns about how it's going to crash. Well, markets, unlikely to crash unless it's further out the risk curve. But markets don't crash when the business cycle's picking up. They crash when the business cycle is slowing down. And let's say the ISM crosses 50. It never happens at this point of the cycle. So really, there's no real rational argument. And the Fed are cutting rates now. They're pushing liquidity into the system. The market's buoyant, and the ISM is going to start picking up. All the forward-looking indicators are. So it's really difficult to argue that there's a bubble and it's going to pop. And when we get to the bubble argument, something else they miss is they look at price earnings and they say, see, price earnings keep going up there. It's getting wildly expensive. But price and earnings, if you remember the story of your earnings and house prices are always going up more than your earnings. Well, what is price earnings? It's the share price, which is driven by debasement, and corporate earnings, which are driven by GDP growth. So over time, as we add liquidity into the system, the everything code suggests that price earnings will keep going higher because of this dynamic. But people don't understand it. So they look to a world of the past. Now, this has actually all been done before. This is not a brand new thing. After World War II, this is what they did. They used yield curve control as a way of stimulating the economy. And they essentially grew their way out of it by refinancing the debts. And we had exactly the same 4-year cycle back from about 1948 to about 1968. So we had 20 years of it back then. And this is the 1970s gold owning, value investing inflationists who think this is the case. The US bond market can't completely fall apart. Why? Because you can print money and buy it. So that doesn't happen. The currency could weaken, but the rest of the world is even worse. So I'm not sure where this inflation, this mystical, magical, long-term structural, the 70s are coming back, when you've got an aging population, you've got low productivity, and you've got an accelerated technological revolution, including AI, plus high debts. It's almost impossible to generate sustained inflation, which is why China can't generate it, Japan can't generate it, Europe can't generate it, and the US can't generate it either.
Do you think the rate cut was the right move at this moment in time?
Christ, yes. The rates were at 5.5%. Inflation was at 2.5%. I mean, that's 300 basis points of tight interest rates. That's crazy. Mm-hmm. Look at people's mortgages. Look at car purchases. Nobody could get access to credit. Look at credit card rates. It was too restrictive for the economy. Mm-hmm. And they need to cut it because they also need to roll their interest payments and they need to refi their debts at lower rates.
Do you think, was it a mistake, like moving rates as high as they did?
No, I don't think so. I think moving rates as high as they did was necessary to stop that pervasive idea that inflation was going to be sticky, because inflation can be a mindset shift. You know, we saw corporations after corporation just raise prices. And what this did was slow all of that down. So, no, I don't think it was a mistake. I don't think a Federal Reserve did a very bad job. Nobody likes going through a rate cycle like that. This is the largest of all of our lifetimes, and so therefore it's pretty ugly, doesn't feel good. Nobody likes it. Business slows down for everybody. But it worked in terms of getting rid of inflation and any expectations of future inflation. So inflation expectations have collapsed in the US now. Mm-hmm. In fact, where are they today? So 5-year break-evens are at 2% and 1 year are at 90 basis points. So nobody's expecting inflation because the Fed did a good job. Now they need to bring rates lower, and they have to bring it a lot lower. You know, I still think rates come down to 2.5, which is the trend rate of growth of the economy. The evolution was macro made all of the returns in very short periods of time in catastrophic markets. You know, a market like COVID was great for me because I know that playbook, right? You make a lot of returns very fast. But macro is becoming very difficult. There was a few macro opportunities that came since 2012, but not many. After the European debt crisis, what did we have? We had a collapse in the price of oil in 2016, 15.
Which you nailed. You nailed that, yeah.
Yeah, I got that really right.
Really right. Yeah, on CNBC, I remember that.
We had a decent rise in the dollar in the middle, and that was about it. But equities outperformed everything, and all the macro guys missed that trend. And this was my work that I did over COVID when I started to think about debasement of currency, and then started to think about the exponential age of technology and where this is going. And you reach the moment, it's like, oh my God, this is all one thing. You know, we have rising markets that's creating more capital, that's flowing into technology, that's driving technology. We've got the fastest pace of technological change in all human history, and the central bank has taken out the big risk to the downside. So suddenly the data tells you to become an optimist. It tells you that we're in secular trends, particularly in tech and crypto. So even though they're volatile, every low is higher than the last. And when you look back, they've outperformed everything, even though you've had that volatility. And you're like, why was I so stupid? You know, really, I could have just bought NASDAQ when I started my career and I'd have done much better. But the narrative is so alluring around the macro collapse. And the fear keeps so many people out of markets. And there's a whole bunch of people on X who've made a whole living out of the fear of collapse. And I know you've been caught up in that in the past. And that fear of collapse stops you investing. It stops you buying a house. And look what happened. Your future self did not thank you, your past self, because you missed it all. And I've done that. I didn't own equities at all. And when I look back, you're like, what, stupid. But I didn't really understand. I didn't really understand what I know today. And now we've got all of these forces working together, this hyper acceleration of technology, global central bank liquidity that's forcing stuff up over time. And then the fact that they've taken away the largest side of the risk of markets, and the inflation bogeyman is just a bogeyman. He just exists in the dark places of your mind because it's very difficult to generate inflation in this world. They will tell you that, well, now the latest story is, well, obviously, every year there's a different story why energy is going to go to $200 a barrel, why it's all going to come to shit, and why inflation's coming back. Every year is a different narrative. Now it's like, well, it's the AI data centers. We're going to run out of electricity. It's going to be infinite demand for power. And oh my God, this is the most inflationary thing. They'll be wrong again, as they've been every single time. If AI is given the problem of solving its own power, it will solve it.
Interesting.
Old creaky grids that we use today, I don't think of the future. I talk about this a lot, that the marginal cost of electricity, marginal cost, will go to effectively zero. And everyone's like, that's ridiculous. The oil markets are going to go to the moon. I'm like, no. Firstly, there's almost infinite oil because of shale and everything else. And then you've got infinite gas. It was literally infinite gas, which is a replaceable commodity. Then you've got EV, which is solar, has been scaling so fast that in Europe, UK, and many countries, it now exceeds all other forms of energy, all of Scandinavia, and it's accelerating, and its cost has fallen 99.9%. And then we will bring back nuclear. But a lot of this, solar, everyone's like, well, solar's never going to work because how can New York have batteries for all of New York? Because people are thinking about the past. If you go to Germany or Scandinavia or even the UK, people have solar houses, solar offices, they've got a distributed power grid. It doesn't, yes, it feeds into the main grid, but you don't need to be on the main grid. Many of my friends don't need to use electricity from the main grid ever. You just need a Tesla battery and a bunch of solar. And so it works very well. So distributed power grids, A, much more robust, but B, they don't need the infrastructure costs because they're borne by companies in an individual or maybe a small village or town. So we've got that coming, and energy, we're seeing the same thing. Yes, Microsoft is helping get 3 Mile Island up and running so they can run data centers. But really, when you look at nuclear technology now, the whole these new mini reactors are like this size. And so they as opposed to being 3 Mile Island, they become something that goes next to a data center. I get hate for it. Hate for being an optimist, hate for investing in technology, hate for investing in crypto. It's a politicized anger, and it's not a left or right politics thing. There's an anger around assets that it's just weird. People just don't want their view of the world to change, but the world always changes. And so if things change, if the facts change, then you've got to change, but they don't want to. They want to live with a vision of the past and a world that they understood. I get it. Sometimes change is discomforting for people, but I've learned to embrace it because it's going to happen regardless of what I think. So I can shake my fist like angry man at the sky, or I can say, fuck it, I'm just going to go with this. Let's see where this goes. And suddenly it's so liberating mentally. You see the world in a whole different way. You don't think that China's going to war with the US at every turn, or Russia's going to do this, or that's going to happen. You start to see, you know what the probabilities are? None of that's going to happen because mostly it doesn't. And it's kind of nice.
As Pal concludes, it's clear that embracing change, rather than resisting it, will be key to navigating the future. From technological advances to shifts in global economic dynamics, those who adapt will be positioned to thrive. Don't miss out on this powerful message. Subscribe to stay informed and be part of the conversation on the forces shaping tomorrow's world.